What's up, everyone? It's Todd Horst here with Tasty Tracker. Today I wanted to talk about market crash, and would you believe that I had planned this episode months ago and actually wrote out the slideshow, created it about a month ago, but I'm sure nobody's going to believe that anyway. I didn't think it was going to come maybe this soon. Actually, funny story, I thought it was going to happen maybe 6 months ago, and then when I was wrong on that, I just decided to give up trying to call when the top was. And anyway, and then I thought it wasn't going to come this soon, and I definitely didn't think it was going to be this severe or have the calls that we're having. There's actually sort of two causes here with the virus and the oil conflicts, negotiations, whatever, arguments. So anyway, that's just a funny story. But this is just a general topic on market crashes and sort of my feeling on the market in general. So while I might touch on the current market, I'm not really going to get into that too much because I believe any market crash is a temporary thing. Okay. So yeah, like I just said, ignore some of the text because it's not as applicable now that we're actually sort of in a crash and bearish market. But anyway, so the first bullet point here is everyone is worried about a crash happening soon. And the market doesn't go down just because it hasn't, because it's gone up too long or it hasn't gone down in a while. That's sort of, people will think that, oh, it's been 6 months since we've had a huge downturn or anything like that. There was something at the beginning of 2019. So it, in people's heads, it's happening every year, and it might happen every year, but there's something driving that. It's not just because we've gone too long without it happening, and so it's going to happen. There might be some consolidation or slight correction, but it's not going to bring on a full-on crash or anything like that. It's not related to time. So anyway, that's just something that sort of drives me nuts, people saying that the market is due. And if there are no reasons for the market to go down, it will just continue to go up. But yeah, so anyway, I already covered the second bullet point. And the third, it's not a predefined interval. So sort of get that out of your head right away, and if we could just erase that from the internet, that would be great. So the market crashes because of a real reason, and if there is no reason, there is no crash. A short-term downtrend is completely normal, and that's not called a crash, that's just called a bear market. But over time, over the longer duration time periods, the market's always gone up. And the reason I think it's going to go up now, maybe even faster than it has even in the past, if you think about this, I don't have a pension plan. 50 years ago, everybody had their pension plans, or maybe not, I don't know, I'm not that old. But pension plans no longer exist, and what's in its place are 401ks and 403bs. So that's what I have because I'm in the health industry. That's an alternative. Anyway, so all of my retirement is in the stock market. And even when people had pension plans, they were still encouraged to open up IRAs and invest in the stock market. But it was never to the extent that people are relying today when compared to today. So that's one more reason I think more people are flooding into the markets. More people are looking for a side hustle, so whether they're trading on the side or whether they're taking their side hustle income and putting that into the stock market, millennials are more aware now more than ever, especially with the ease of use of Robinhood and the casual investor trading on your phone for free. That's something that was never possible before. So when you get this continual influx of people, that's obviously going to drive prices up. It's the same thing with index funds. Index funds are, they're not new per se, but relatively speaking, they're new, and people are just being told to dump money into index funds. And so every stock that's held in that index fund is then going to get a piece of that pie, and they're also going to get have their stock prices move up. So I just think the now more than ever, the stock market is it's sort of demystified, and everybody's getting into it. Next slide. Okay, so technology is obviously advanced, so we have these algorithms that are automatically buying and selling. They're looking for opportunities, and so because they can operate so quickly, I think what you're going to see is the increase of flash crashes, where the stock market is going to completely tank. But then the different algorithms will quickly buy up that dip. And so you'll have this war where before that information would have taken a long time to get out, and people would have had to call their broker, hey, I want to sell this X, Y, and Z. And so a crash was very long to really pan out, to hit the bottom and then to rebound. So that's one reason why I have my style of positions are longer term, 45 days. That's not long for stocks, but that is long for options. 45, 60, 90 days, anywhere in that range, I'll have my positions open for. And so even if there is a flash crash, it's not typically going to last that long, and so I'll still be able to get out and be profitable. And in a way, the algorithms actually act to stabilize the market, even though they're going to cause more frequent spikes up or down, typically down. We will see, like I said, them come back in and buy up that dip, and the market's just moving quicker. So if you take the entire timeline of an old crash without technology and just compress it down into a very, very short period of time, that's what technology gives us. So I already talked about information spreading so quickly, and that's the same with people too, because before you would have to read your newspaper, hey, what's up, market's crashing. So like I said, that would be maybe the trigger for you to call your broker, and now you get a Twitter notification on your phone that things are tanking. And so if Robinhood doesn't alert you directly, so and that's how you know how to go out and sell. But it's important to keep in mind here that every reaction is an overreaction, and so you'll always get that bounce back. And so I'm really expecting that coming up here. I don't know when. I'm not sure if the oil thing wouldn't have happened, if we would sort of be flat at this point, or if things would go down on their own, continued with the virus. It's kind of hard to tell what is the cause of what. I'm guessing at this point the virus is more important than oil again, but the second big leg down there was oil. So anyway, if you believe that the overall trend is for stocks to go up, then buying the dip makes sense, especially if you're doing options. Just make sure you give yourself ample time. So I might be doing 45 days, 60 days normally. The new positions I put on since the market's gone down have all been 6 months out, or even longer. So you want to give yourself an insane amount of time to be right, because things could continue to drop, or they could start to recover, but just take a long time to recover. So anyway, I definitely don't want to try calling the top, like I said before in this video and in other videos. I thought SPY was going to crash when it hit 300. So I was way wrong on that. We made it the whole way up to basically 350. And so I really don't think it makes sense to try calling the top or even try calling the bottom. If you're trying to be contrarian, you can do it, but make sure you give yourself even more time. And especially if you're playing a bearish play. I think if you're playing a bullish play and you're giving yourself a lot of time, I think that just makes more sense, because the market is going to continue to go up. We all know that it's always been the case. So I guess I'm not really seeing the case for a perma bear, somebody that's always bearish on the market. But you know, who knows? Maybe we'll go into apocalypse or something. That's really it, I think, today. Yeah. Yep, that's it. That's all I had today. Certainly, if you have any comments, what you think about the market and its current state, when is it going to bounce? How low is SPY going to go? Please let me know in the comments below. I've got a website, tastytracker.com, you know by now. It's got a free demo, and I'm starting to roll out alerts there. So once I get that finished, if you sign up now, you'll be able to see the beta and get alerts as soon as they start rolling out through the email. But otherwise, you can see what positions I have on now. And I am not a financial advisor. Here's my disclaimer. And you can see that also in the description of all my videos. Thanks, guys.